The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your competence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Good day, trader. Stacey Burke from Stacey Burke Trading. Today we're going to continue our discussion on pump and dump and pump mastery. Talking about rinse and repeat, simple, parabolic opportunities for scalable trade setups. Understanding that Friday, our closing range, is how the new week will begin. Friday's closing price, but that allows me to hunt out opportunities as the new week unfolds. A day 1, day 2, day 3 template on the front side of the week, and then resetting on Wednesday, turning day 3 Wednesday into day 1 on the back side of the week, Thursday, day 2, and Friday, day 3, the closing range of the week, regardless of the session you trade, whether that be Asia, London, or the New York session. I peruse a basket of instruments because I'm looking for the setup on any instrument when I come to my session, whether that be crypto, energies, indexes, metals, or the major currency pairs and some of their cross rates. Last video, we talked about the closing range and its impact on establishing the new week. In the playbook, I emphasize the importance of the opening range and initial balance, page 26, and then helping us to establish the identification of 3-day setups, 3-session setups, using that opening range and initial balance. And then trigger days, day 3 longs or shorts in the markets, breakout traders. First red day trading signals, which we went over last day. First green day trading signals, the inside day for false break and trend trades, but also parabolic trend trade opportunities from a day 0 template, a 3-day template. 3-session opportunities that can set up for a parabolic trade setup, whether they be short squeezes, long squeezes. And then, of course, if you come later in a session, the low-hanging fruit trend continuation opportunity. First bounce we've gone over before, but for the purposes of these videos, we're going to focus mainly on the simple setups that show up each week, first red day, first green day, and how they turn into a 3-session parabolic trade setup. Now, when traders come to the screen, regardless of the day that it is, every trader has these 3 levels when they come to the screen. The closing price from the previous day, the high of the previous day, the low of the previous day, or the low of the week and the high of the week. What setup are you hunting is the question I often ask, meaning are you hunting a short trading setup, a long trading setup? Now, I particularly like to look for opportunities for shorting, but if the market is only offering me a long trade, it's the same setup, just flipped around, a dump and pump or a pump and dump template. A pump and dump template can build over 3 sessions. It can build over 3 days. Vertical move, the pump, the consolidation, and the parabolic collapse. I'm looking for the opportunity to position myself in the coil before that explosive move. The same thesis applies for the dump and pump. Again, whether that be a 3-session setup, for me being the US session, Asia, London, New York, or a 3-day template. And when I say the Asian session, these highs and lows are established potentially in the previous day's sessions, whether that be London, US, but the next day, the coil, the 3-day coil, the 3-session coil. Again, positioning myself in that coil for the parabolic explosion. Now, in a previous video, we talked about building your watch list, and I've mentioned to traders daily close. I use New York closing charts, 4:59 New York time, regardless of when the closing time is. My close on my charts is 4:59 New York time. So there are 2 things that we can look for at the beginning of a new week, and that is a week that is closed in breakout the entire week, and then of course a Friday that may have broken out and closed in breakout in unison by itself. Now, sometimes I will talk about lowest closing price of the month. I've mentioned that, and also the highest price of the month, the highest closing price of the month. Expansions and reversals. So we talk on the front side, day 2 typically expands the range. And on the back side, we can look for potentially a reversal or an expansion opportunity. So which setup are you hunting? It's the template on the day in the session that you're trading and hunting a basket of instruments to look for which one gives you the 5-star, the 3-star, or a nail and bail 2-star opportunity. Now, parabolic moves will come out of a sideways coiled market. The majority of expansions and reversals come on a Tuesday or a Thursday. Now, depending on what's on our economic calendar, I use Forex Factory. This week we had some sporadic major red news. We had natural gas inventories on Thursday at 10:30 and oil on Wednesday at 10:30. And this week we also had a 2-part FOMC release statement, which is a large impact major red news event. And often the weekly templates can be affected by this being in the calendar. They engineer that specifically. And I've mentioned that the backside can offer tremendous opportunities. Page 75 in the playbook, I talk about second day trade opportunity after an FOMC day. We can often see continuation moves early in the day and often reversals after we see that continuation on a second day trade catalyst. Now, I constantly reflect back to traders in the Mindset Reset videos that it's important to sit on your hands and hunt out trade setups that rinse and repeat where it's easy to make money on. Just taking trades that don't necessarily have a real edge in the market because traders want action. They want to trade every day. Leads traders to over trading, leads them to emotional, impulsive trades. They can engage in irrational behavior when they get behind the keyboard, and often that will sabotage all the good results they can produce when they actually do things correctly. So traders, when they get behind closed doors and they're at the keyboard, become Dr. Jekyll and Mr. Hyde, even though they know everything about trading and trading setups, and they do their homework, they know what they're hunting, but when they get the live screen, they do all kinds of crazy things that are completely opposite to what they establish in their plan. The behavior of the trader is the number one reason most traders fail, which is why I repeat over and over again the importance of training your brain to hunt out rinse and repeat setups that are easy to make money on. Build your playbook of best trading setups. Build your muscle memory, understanding what those setups will look like, how they will evolve from the template on the day, how the behavior of price should be. What day of the week is it? Hindsight pays when you understand this, and then the patience to sit on your hands until that sets up, mastering 1 or 2 of those setups that repeat and hunting them out anywhere on any instrument in the session that you're trading. Chasing movement is what will blow out trading accounts. Always think of your entry point as last night's close. Let's take a look at the Japanese yen for the week. If you're trading in Asia, and obviously Asia, we can have Australian pairs, New Zealand pairs, and the Japanese yen, just for a simple basket of currencies. But we'll just look at some simple opportunities that presented this week. Being patient, sitting on your hands, and looking just for basic opportunities for pump and dump or dump and pump in the session that you're trading. On Monday, we have an opportunity. We can go back and look at the playbook. We have a basic model for trade entry criteria, page 29 in the playbook. We have a really simple opportunity. The market closed in breakout. That was our first signal to alert us of a potential opportunity in the session that we're trading. We also now have a pump, coil, and a dump opportunity, a 1-bar stop, entering into a market driven by other time frame traders. How do we know this is driven by other time frame traders? Because the market is already closed in breakout. We're already in breakout at the lowest close of the month. So in this particular opportunity for session traders at the beginning of the Asian session, we have a high-low range of 15, 16 pips. So again, I talk about a max stop loss, even for a starter on this particular trade. Now, this market continued to collapse and break down right into the London session. On day 1, Monday, think of your entry point as last night's close. The market has come down in a broken out market, pumped up, coiled sideways, and dumped into the open before coiling and continuing on a range expansion opportunity on Monday, day 1, on the front side of the week on the Japanese yen. As we head into Tuesday, day 2, if day 2 typically expands the range, we have a opening range now, and we have our closing price, the closing price from Friday, and the closing price from our opening range. Now, again, we're just focusing on the Asian session and reinforcing just simplicity, simple concepts, pump and dump. We have a market that's broken out. And when we come to an Asian session, we are looking for potentially a 3-session setup. We have high of day, low of day levels and that are formed. Now, I've talked about this before, peak formations. If the U.S. session has made our high of day and our low of day level was made previously, we have a market that's broken out and pulled back inside and made a peak formation low in our U.S. session. So when we come to our Asia session, these levels are relevant. Now, we're just talking about simple rinse and repeat, basic entry criteria following the pump and dump model. We've now triggered breakout traders into the market prior to our session opening times. The market has broken back inside of our universal basic model for trade entry criteria above Friday's closing price and coiling sideways into our Monday's opening range closing price for a simple nail and bail opportunity. Now, not suggesting that this is a best playbook trade setup. We're talking about simple rinse and repeat, common sense opportunities that can present in any session. Now, clearly there may have been better opportunities on other instruments in this session for Asia session traders, but using simple rinse and repeat concepts. We have 3 levels in place here. We have the level at the bottom, underneath 50 to 25. We have the level in the middle, 50 to 75. And we have the level on top, 75 to 100, which is where our peak formation high of day levels have been placed. We have a market that coils in our middle level, dumping down into our level 1 for a simple nail and bail opportunity on Tuesday, day 2, after a market that is pumped up, broken out, collapsed into the open of the session for the reversal trade. Now, Tuesday broke outside of Monday's high of day level, and when we come to our Asian session, the market reverses from closing price right into the open of the new day before breaking down, coiling into the open, and again giving traders an opportunity for a low-hanging fruit continuation trade in our Asia window. Again, a 1-bar stop, simple universal entry criteria model for a market that continued to break down in the Asian session. Simple rinse and repeat, sticking to understanding day 1, day 2, day 3. Now, reinforcing to you, not suggesting that every trade here is a best trade candidate, but simple rinse and repeat. You will also notice a larger pump and dump template from a market that has closed in breakout, pump, consolidation, and the dump in the new day in the Asian window on Wednesday, the FOMC day. The second day news catalyst opportunity after the FOMC is a momentum news catalyst continuation opportunity. Paul Tudor Jones, think of your entry point as last night's close. We had an early entry opportunity after the FOMC, which again is a continuously repeating opportunity when indeed if it presents. And in this particular situation, we had this on Thursday, front side again of the new day for a explosive continuation on several yen cross pairs. We have BOJ tentative on Friday on these pairs, which is again another potential mover, but a fantastic second day trade opportunity in the Asian session. Paul Tudor Jones, think of your entry point as last night's close, a 1-bar stop, a news momentum catalyst, multiple entry opportunities in a market that was now going on a range expansion opportunity, day 2 on the backside of the week. A smaller dump and pump template heading into our new day. Higher highs, indicating the potential now for a range expansion. Paul Tudor Jones again, when you see a range expansion, the market is sending a very loud, clear signal that it is getting ready to move in the direction of that expansion. FOMC gives us the higher highs, the range expansion, the dump on top of our initial U.S. session prior to FOMC, and the pump continuation universal entry criteria. Very simple model. Keep it simple. Rinse and repeat for an explosive range expansion on Thursday in the Asian session. Now, Friday, we have a market that closed back inside. It broke out after our news momentum catalyst second day trade on Thursday, day 2 on the backside. The market pulled back inside and closed back in range. Pumps up initially into our lower peak formation highs made in our US window prior to the close. And again, we're looking at a 3-session opportunity when we come to the screen. London, US, and Asia heading into our new window. So we have a market that is now pumped up and closed back inside at the open of our session. Now, I've mentioned to traders, we talk about a 1-bar stop, but very simple pump and dump opportunity in the session that we're trading from level to level, Free Cash Friday. Why does it have to be complicated? Why can't it be simple? Trying to catch moves everywhere, or just simple rinse and repeat scalable playbook trading setups. That was Asia. I have a watch list of potential candidates, narrowing that down to 2 or 3 in the session that you're trading, picking one, well-engineered opportunity in your timing window. Execute the setup, shut the computer down, walk away, review the trade later, and repeat the next day. Hunting the same high probability trading setups each day, each week as the weekly template evolves. Easy, money-making trading setups that are profitable, zero stress, zero emotion, scalable in size, no analysis paralysis, FOMO, YOLO, Fogey, or FOGO. 3 levels that every single trader has when they come to the screen each day in the session that they're trading. Simple, reproducible, and scalable. Now, that was just a simple example of the Asian session. In our next video, we'll go through the London session opportunities. Keep it simple, reproducible, and scalable. We'll see you in the next video, traders, and may the markets go with you.